Hi guys, Dane here. I'm just going to do a quick market watch video. It's November 28th. I just want to show you what I'm looking at right now and what has changed since I believe the 10th. It was the last time I updated this. So let me get started here. Okay, so the only thing that's really changed with my chart is I've included this little zone where I think, if this breakdown continues further, where the good buying opportunity would be, where the major resistance would be. Really simple on how I got it. I just took it from our high of last cycle, went down to where I seen major resistance on the 3-month chart, drew it up, look for any confluence. Let me open up the moving averages, go back to the weekly. I happen to open this up. Let me take away that blue 52-week moving average that I have. And I noticed, that area would be right in with the 1,000-day moving average and the 200-week moving average. So I decided, I'm going to keep that on there. That looks like a good zone for me, and just will help me visualize when would be a good time for me to start accumulating if I choose to do so. So taking a look at things again, we did have a breakdown from this channel that we have. Currently, I'm waiting to see if it ends up being a dead cat bounce. What we could expect is a little bit of hype. It come up, retest this line, and then break back down. That's what they would call a dead cat bounce. You can look that up. And then obviously if we continue with downside, I'd be watching for this 1,000-day moving average, which is still currently going up, but eventually could turn over, in the future. And then we'd be looking at the 200-week moving average is like that back to truck up, load up. One thing that could give us a heads up is the Gaussian channel. So let's just see where that is right now. We can see we broke into the Gaussian channel, came right down, touched the bottom of it. Now, as I've explained in previous videos, generally it's going to turn red before we get that major drop down to the 1,000-day moving average. It's kind of like a heads up, warning shot fired. You can see here, it turned red, and then we drop down into our buy area. Now, in order for that to turn red, it has to start, it has to break even and then start curving down. Now, as long as we are below that middle line, it's going to have pressure, pulling it down, creating that curve. And we can see this in the past as well. We turned red and then broke down below that 1,000-day moving average. So it's a little bit of a heads up to, maybe get some money on exchanges, get some orders in where you want to buy, and then just be patient. Take this Gaussian channel off. I guess we could look at some other indicators now. Stochastic RSI. Put the money flow index on. And the RSI. Those are kind of my three amigos. They tell me a lot with what's going on in the market. Now, what we are seeing is a cross on the stochastic RSI. That's our momentum oscillator. That's giving us a little bit of heads up that we could possibly be changing momentum for a while, or it could just be like this, where it crosses up, crosses down, crosses up, and we don't get anything. But this is the first signal. It has to cross up before it will pump up, and we are seeing a cross right now on the weekly. So we just have to be patient. Give it a few more weeks, maybe give it into the new year. Because once we get above this little center dash line right here, that's when things really start to move. We are not there yet. We are still low down. We can see with the money flow index, we are curving up. The RSI, we are curving up. So that's about it. Kind of just sitting on my hands, waiting. We're obviously, for me, in no position to be selling at these price levels, and no position to be buying at these price levels. Now, that's my own strategy. As you all know, I start accumulating under the 1,000-day moving average and back the truck up under the 200-week moving average. We are not in any of those positions, so that's it. I'm gonna leave the video at that, and you guys have a good day. See ya.